income statement, income statement, income statement. This is one of the most important topics you could master in POA. So let's look at some of the paper one or some of the multiple choice questions that you must be able to answer. Now, some of these questions are a bit tricky and they are similar to the CSAT questions that you're going to see in your paper one. Because I don't want you guys to cram the income statement. That's one of the main things I want to remind you guys of as we go into these multiple choice questions. I don't think people understand that the income statement format should not be crammed. It's important to know how to create the income statement and to thoroughly understand the ins and outs as it relates to the income statement, right? Because this can increase your chances of passing POA. It's one of the most tested topics. You can be asked to create an income statement for a sole trader, partnership, a limited liability company, etc. Now that is out of the way, let's proceed. First question, gross profit is calculated in the what? So where is gross profit calculated? Is it in the profit and loss account? Is it in the statement of financial position? Is it in the trading account? And is it in the trial balance? Where is the gross profit calculated? Well, gross profit is calculated in your trading account. The answer here is C. Please make sure you know the difference between the trading account and the profit and loss account. I have a TikTok video on that. You guys could feel free to go check that out at the POE Academy. Number two, let's see if you can get this correct. So they gave us a bunch of figures and they want us to calculate the cost of sales. They gave us purchases is 400,000, revenue is 600,000, opening inventory 60,000, and closing inventory is 20,000. What is going to be your answer? Now, if you didn't work this out before, please make sure pause the video, try to work it out, and then look at the answer. That's the way you're going to get the best bang for your buck. The answer here is B. Why B? But let's look at the basic formula, right? The basic formula says cost of sales, also known as cost of goods sold, is equal to opening inventory, add either your purchases or your net purchases minus your closing inventory. This is the basic formula for cost of sales. We have our opening inventory, we have purchases in this case, so we're going to use purchases, and we have closing inventory. Another thing I want to plug in here, make sure you know when to use purchases and when to use net purchases, right? So these are some of the little nuances that you need to make sure you know when it comes to income statements. When you plug your figures in, we're going to get opening inventory 60,000, purchases is 400,000, closing inventory minus 20,000. Work that out. The answer is B, which is 440,000. Note, if this is calculated horizontally as we did it, right, a regular mathematical equation format, if it's calculated horizontally or vertically, like how the income statement is normally prepared, you're going to get the same answer. It's just that the vertical format have a little bit more, what I would call like accessories. There's a little bit more to the vertical format that you would see when you are creating the income statement. Number 3, when calculating net purchases, return outwards is what? I just asked you guys to make sure you know when to use purchases and net purchases. You also have to know how to calculate net purchases. There's a lot you have to learn on the income statement, and I recommend that you guys invest the time to learn the basics. And if this is something you want to do, you could do that in our income statement mastery course. I'm going to leave some details in the description so you guys can get some more information about the income statement mastery bootcamp if you are interested. If you look at the vertical format here, you're going to see carriage inwards, all right? And we're going to have that as a positive figure being added to purchases. Then you have return outwards or purchases returns being deducted or subtracted from your purchases figure. This is the net purchases formula in a nutshell. Anytime you have carriage inwards and you have return outwards, you have to calculate the net purchase figure. Again, the answer here is C. Congratulations, you made it through 3 of the questions. We have 2 more questions to go. Let me know in the comments how many did you get correct thus far. Let's celebrate our small wins. All right, number 4 is on the trickier side. And this deals with some accounting adjustments. All right. Our accounting adjustments will affect our income statement and it will affect our balance sheet. So you have to know also how to calculate your accounting adjustments, which is normally covered in topic 6 of the POA syllabus. Let's read through this again. Pause the video if you didn't do the question before, and then look at the answer. The provision for doubtful debt changed from 500 to 350. What are the entries to record this? So we have a decrease in our provision for doubtful debt. And one of the key things that you have to note when you are dealing with provision for doubtful debt and your income statement is only the increase or the decrease will go across to your income statement. Only the value of the change will go to your income statement. So that's one thing we deal with, right? Off the bat, we know option A and option B are incorrect because they are not dealing with the increase or the change. It's either option C or option D. Now, how do we know whether it's C or D? Well, another rule has to come into play here. And the rule says when provision for doubtful debt increases, that increase will be shown as an expense. So therefore, that increase is going to be debited or deducted from your profits. When we have provision for doubtful debt decreasing, which is the case in this question, we are going to show that decrease as an income. So that is going to be added to your gross profit. Whenever we add to the income statement, we are crediting, and whenever we are reducing profits in our income statement, we are debiting. So here, the only option that has credit the profit and loss account or credit profit and loss is option D. So when our provision for doubtful debt decreases, we will be crediting our profit and loss with the decrease. Important information here. This is one of the things that always gives students some trouble, provision for doubtful debt. So if you look really closely at the extract from our income statement on the screen, you're going to see right after gross profit, we have add other income. So we have discount received, rent received, etc. And the last one we have on the list there is decrease in provision for doubtful debt, right where my cursor is moving. So anytime we have a decrease in the provision for doubtful debt, that is added to our other income. That increases the amount of money or the income the business earns. On the other hand, let's go down to under expenses. And the last one, whenever we have an increase in provision for doubtful debt, that will be recorded as an expense and it's going to be debited or deducted from our profits. Which equation represents net income? So what they're asking you here is, which one of these equations will give you net income? Net income is also known as net profit or profit for the year. So how do we get our profit for the year? Do we take net sales and minus gross profit from it? No. Do we take gross profit and minus cost of sales from it? No. Or cost of goods sold from it? No. Do we take our gross profit and minus our total expenses? Yes. Net sales minus cost of sales, that is not going to give us our net income. That is going to give us our gross profit. So look at this extract again. You're going to see we have our gross profit figure to the top, extreme right. The first figure there represents our gross profit figure. Then we added any other income. And then we deducted our expenses, right? So if we didn't have any other income, we would have just had our gross profit and our expenses, and we would have just deducted our expenses from our gross profit. Please make sure you know the ins and outs of income statements, right? This is heavily tested, paper 1, paper 2, paper 3. And the tricky thing about it, you could get an income statement under any type of business. income statements and income statement related information show up every year. So you have to know how to calculate the profit or loss. That's where the income statement comes in. You have to know how to share the profit or loss. That's where your appropriation account comes in. Another thing that is highly tested and could be challenging for students is the manufacturing account. The manufacturing account is important because it will affect your income statement. If you're creating an income statement for a manufacturing business, ratios as well is income statement related because you're going to use the ratios to calculate the performance of the business. You're going to use the ratios to analyze the income statements and your balance sheet. Okay, so again, make sure you understand income statements. If you need help mastering income statements and understanding all the bits and pieces and putting everything together, we have something for you that's called the Income Statement Mastery Bootcamp. As I said earlier, check out the description for more details about the Income Statement Mastery Bootcamp so you can increase your chances of passing POA, get all the possible marks you could possibly get. Congratulations, we went through some of the tricky questions. Let me know in the comment, was this helpful? Do you want more questions on this topic? And of course, subscribe, like, comment, and share, and share.